Duolingo stock is down 71% in the past year, and I made a video about a month ago analyzing the stock and saying I wasn't buying them because of the valuation. However, since then, the stock has fallen over 30%. So let's see if the stock is now a buy. The stock now has a market cap of $5.2 billion and they are generating $964 million in revenue, up 39% year over year. Analysts have them rated as a buy with 139% upside, and they are now trading at a P/E ratio of 14, although we'll talk more in depth about the valuation later with the discounted cash flow model. Now, the stock is down 30% in the past month for no particular reason. It is just that the market in general has been falling a lot, especially software companies. Companies like Microsoft down 12%, Oracle down 17%, Palantir 26%, or Adobe down a lot as well. In fact, if we take a look at their financials, the company hasn't stopped growing. For example, revenue from $70 million 6 years ago to $964 million currently. And in the past couple of years, they've been growing at 40%, which is insane. Now, if we take a look at profit, they've also seen a massive jump as this used to be an unprofitable company, and they are now generating $386 million in net income. Now, they have been generating free cash flow for a couple years longer and now generating $354 million. And as I've said before, this is a software company, so their margins are amazing. I mean, gross margin is around 71%, profit margin 40%, and free cash flow margin 36%, which is amazing. What is also interesting is that daily active users is also at an all-time high of 50.5 million, and monthly active users also at an all-time high of 135 million. Now, what is curious about this company's revenue is that, as you can see here, paid users are only $11.5 million, so around 90% of their users are users that are using the app for free. However, if we take a look at the revenue by segment, the subscription part of their revenue is almost all the revenue, coming in at $805 million. So basically all of the revenue comes from their paid users, which is only 10%. Another huge positive about the company is the balance sheet, as they have $1.1 billion in cash and $97 million in debt, which is truly amazing. And as I said before, this is typical of software companies, that they have an amazing balance sheet. By the way, if you want access where I'm showing all the data in this video, you have my code to stockanalysis.com in the description. Now, analysts have still Duolingo growing pretty fast in the upcoming years, from $1 billion in 2025 to $1.53 billion in the next 2 years. So it is true that they are not expecting Duolingo to grow at that 40% that we saw in the past, but nevertheless, this is still very good growth. Now, as far as profit, it is expected to decrease almost 50% this year. I honestly don't know why, but then start growing back again and make $5.49 per share in 2 years. And considering how good their profit margins are, I wouldn't be worried about profit at all. I think that in the long term, it's going to be a profit machine. Now let's talk about the valuation, because this is the aspect that has changed a lot since the last video. In order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a several analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $124 per share, middle $183, and high $269. Now, because the stock is currently trading at $113 per share, and because the stock is currently trading at $113 per share, it means that if my low assumptions occur, you would get an 11.6% annual return on your money, middle 19.3%, and high 26.8%. So these are huge returns, and the valuation, as you can see, looks very attractive. Now, my assumptions, I assume Duolingo grows revenue between 7 and 15% over the next 7 years, averaging a profit margin and free cash flow margin between 33 and 39%, and I assigned the PM price to free cash flow at the end of the 7 years of 15, 17, and 19. So I think my assumptions were actually conservative. However, if you want to make your own, I'm going to leave a link to the spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. So Duolingo is a company at an all-time high in terms of financials, at an all-time high in terms of monthly active users, and at an all-time high in terms of profit that is going to continue to grow with a great balance sheet and whose valuation is very attractive. And now in terms of the stock price, it is actually in fact lower since the company IPO'd in 2021 at $140 per share. Now, they are reporting earnings next week as well, so we'll have to watch out for that. My only concern about the company is actually their moat, because it is true that it is the #1 learning language app in the whole world, and in fact, as they say here, they've managed to make it fun and effective. They've also managed to do learning a language sort of like a game. You also have streaks every day you come into the app, so it's fun to learn a language. However, I have my doubts with competition and on whether Google or ChatGPT can recreate a learning language software or app. So I'm currently doing more research on this business at the moment because Duolingo honestly looks really interesting, especially now after the recent 30% fall. The valuation looks very attractive. We'll have to watch out for their earnings next week. Let me know what you think about Duolingo stock in the comments, and I'll see you in the next one.